Hey there, I'm Marty Sakata, host of Resilient Alpha. You might know me from the Ivy Family Office Network, almost 3 decades of family offices and big shots collaborating on alternative investments, strategy, and good causes. That's the fuel for this podcast. Why Resilient Alpha? Simple. Why do some funds and managers crush it and others crash? We're cracking that code, redefining alpha, and bringing top brains to unpack asset classes and hot alpha ideas full throttle. Buckle up and enjoy the ride.
Hello, everyone. This is Elizabeth Cho Fertique with another podcast episode of Resilient Alpha. Today, we have the pleasure of speaking with Oscar Garcia, who is an accomplished entrepreneur and investor for the past 20 years in the life sciences industry. He's originally from a prominent Dominican family and therefore brings a unique perspective to his work. Oscar is the founder and managing partner of GD Partners that was established in 2021 in Boston. This is a new healthcare venture capital group. He's also the founder and president of QES Medical, a Boston-based consulting firm that services the medical device and life sciences industry that was established in 2009 and is also based in Boston. With a strong engineering and business background, including past roles at industry giants like Abbott Labs and Covidien, which is now part of Medtronic, as well as deep involvement in the medical innovation ecosystem. He currently serves as a member of the selection committee at Harvard Business School Angels of Boston, the Harvard New Venture Competition, and the Mentor Network in Stanford University's Emerging Student Accelerator program. Oscar is now channeling his collective expertise into GD Capital, the new venture healthcare group, under a Dominican family office. And he's aiming to drive innovation and making a lasting impact on the industry. Here's more of my interview with Oscar Garcia.
The content here is for informational purposes only, should not be taken as legal, business, tax, or investment advice, or be used to evaluate any investment or security, and is not directed at any investors or potential investors in any featured fund or deals on this video.
All right, so welcome back to a new episode of Resilient Alpha. And today we have Oscar Garcia here. Good to see you, Oscar.
Nice seeing you, Elizabeth.
Okay. Yeah, so Oscar is an accomplished entrepreneur and investor with over 20 years of experience in the life sciences industry. He's originally from a prominent Dominican family office. He brings a unique perspective to his work as a result. He is also the founder and managing partner of GD Partners, a Boston-based venture capital firm that was established in 2021 that invests in life sciences, companies that are poised to transform healthcare through cutting-edge technology. That's great. You're also the founder and president of QES Medical, a Boston-based consulting firm established in 2009 that services the medical devices and pharmaceutical sectors. With his strong engineering and business background, including past roles at industry giants like Abbott Labs, Covidien, which is now Medtronic, as well as deep involvement in the academic and venture ecosystem, where he's currently serving as a member of the investment selection committee for the Harvard Business School Angels of Boston, the Harvard New Venture Competition, and is a mentor in the network of Stanford University's Emergence Student Accelerator program. Now, Oscar's putting that all together and channeling his expertise into a new healthcare venture capital fund, aiming to drive innovation and making a lasting impact on the industry and the patients, of course.
Of course.
Okay. So, Oscar, could you share a bit more about your family background? You come from a cacao growing family business, which is so far removed, but I'm sure there's some tie-in.
Yeah.
And what inspired you to focus on the healthcare venture capital space while continuing to stay engaged with your family business?
Well, thank you for the question and thank you for the kind introduction. Nice to be here with you, Elizabeth, and thank you, Mari, for the invitation to be here in this podcast. So to answer your question or to tell you more about my story, my background, as you said, uh, I come from a family that has been deeply involved in the agriculture space for many years. Uh, Around 65 years we've been in this business. Uh, I'm the third. I'm part of the third generation. I'm the oldest grandson of the third generation, uh, and that's where I come from. But if I start talking about the venture in the life science, that happened when I moved to Boston. I've lived in Boston for the last 23 years. Uh, it's been my home, and that's where I live with my wife and my three daughters. And when I moved to Boston, it was because I wanted to follow my passion, which is life science. But it's deeply related to my inspiration of what I saw growing up in this family that has made tremendous contribution, and that was an inspiration I got since I was a child. My grandfather was who founded like the business that we all enjoy and we are all proud of being part of. And I saw that as a child. You know, I got close connection with him. And I remember I got good memories, like when I was 10 years old during summertime, and he was picking me up, and I was walking. I was doing his rounds that he did on a weekly basis, visiting all the farms um, that we own, and knowing every farm that we have at the time, uh, because I was working with him. So I saw that, and that was kind of an inspiration for me. So that's something that I kept in the back of my head all the time. And he passed away 23 years ago, and I still talk about him because I vividly remember him. And shortly after he passed away, that was when I moved to Boston. And my inspiration was to do something big because I saw somebody like my grandfather doing it. So when I moved, I chose Boston because it's where many new technologies are developed. I knew that was the hub for innovation, and at the time I was very interested in doing that. My background in terms of education, I'm an industrial engineer. I also have education in business. And when I moved to Boston, I joined a team. Uh, we were 11, a team of 11 at an empty building with a mission and a vision to build a vascular robotic company. So that was a tremendous experience, tremendous opportunity. And that company inspired me so much to start thinking about other businesses. You know, back then when we were doing something that was looking in the right direction, I created a consulting firm, and I had those two roles in parallel. I was, helping build that company, and also consulting companies to do something similar. And just to clarify, the building of that company, we all wear many hats, but have we all had some technical skill set that we were bringing to the team. So we all were focused on product development. So, and when you're talking about a vascular robotic company, you got many devices into one. You got software related uh, uh, technologies. You have hardware, and you have all the regulations. Because you needed to go to FDA, and you needed to also eventually go to other markets. So all that was taken into account since the beginning. So anyways, when I was doing that, and I decided to do a consulting company, I started helping other people do something similar. Of course, not our competitors, but help people launch companies. And I continued doing that for many years. I still run that company. But later, that vascular robotic company had a success story. That company was later acquired for over $1 billion. And that was a good validation point that I said, well, I knew we were doing something important. I knew I wanted to help people doing something similar. And when you see that later, that was like 12 years after that got that exit, you get, that reward feeling that you you were part of something that was that amazing. And that it is how I came to Boston from a family, that was unrelated to the healthcare, but with the passion of doing something important. And that's my story. It's like that. Started my deeply involvement into the life science space. And then as I was continuing providing consulting services, I started coming across companies that I thought they were good investment opportunities. As a consequence of me providing consulting services to many startup companies. So then I started thinking about, well, this is another business. And initially didn't think about like as a venture capital firm, but I thought about those companies and opportunities as investment opportunities for me. And I started investing personally. And then people in my close network knew I was doing that, and they expressed interest in being part of any of opportunity that I thought was worth it. And I created my first entity, and I was able to invest alongside other people that wanted to join me, but was through my vision and through my exposure to those type of companies. So that make me feel like, well, I'm on a track to do something here, something more formal. So I continue my education. As I said, I'm an engineer, but also have some education in business, and continue educating myself, most recently with executive program at Harvard in venture capital, in private equity and venture capital. And within that group, more people express interest. And also within that group, I was invited to be part of the, as you mentioned, the Harvard New Venture competition, in the sense of being part of the judging committee. Likewise, I serve in the board, in the judging committee of the Harvard Business School, Angels of Boston. So those doors were open to me because of my exposure into the life science industry, because of my view of opportunities, because I've been in the size of the startup companies, I've been in the shoes of the entrepreneurs, and I've seen companies doing well. So that opened up that opportunity. In a similar fashion, then I started getting more connected into the ecosystem, into the academia ecosystem. And I also, from the West Coast, I'm also part of a network, mentor network in Stanford University, in one of their accelerator programs, which relates to healthcare. Companies coming from the healthcare perspective that, they want to push forward. As a matter of fact, we were called a few days ago with some of the companies coming from this period. And that is part of what my story has been, coming from an inspiration of doing something important, and then following my passion into life science, and that opening, my inspiration to start a company and then start another company. So that's part of my story. I'm very excited about, sharing that, because it's very emotional for me to say it, because it has been a passion that I felt since a long time ago.
Yeah, no, congratulations, Oscar. It's quite a story, and I'm sure your grandfather, he did not, create Rome in a day. And likewise with you, it took a long time, but you stuck to it. And I wish you the very best, and hope you will make that great impact. So,
Thank you.
yeah, let's go to the next question. The healthcare venture capital space is highly specialized. What do you think differentiates GD partners in this sector? And you can talk about your investment areas or whatever. Just let us know what makes you stand out.
Yes. I think it's a good question, because that's why I do it. I have a deep understanding of the industry, because I've been in this industry for over 20 years, 23 years by now. And I think, like anybody that is investing in an industry, in any company in that industry, they have an edge if they understand that very deeply. So that to me is an edge. But I think that my strongest edge is that I understand it from being inside of those companies. There are people that maybe have the expertise in the life science space, but they've only done it from the investment perspective, which is good. But when you had a chance to see how companies are built, you've been part of those companies, and you've seen it, and you've had success stories, and you've also seen other companies do good, do bad through the consultant firm. We get to see, many companies, and we've seen a lot. We've seen companies that done well. We've seen companies that they haven't made it, and you learn from all of that. So to me, the strongest edge we have is understanding the industry, and that's one of the differentiators I think we have. The other one I think is access to good opportunities, and that came naturally. That's one of the kind of first things that motivate me. Is like I started coming across good companies because we provide services to them. So that's the access from that angle is an edge, and also access from the angle of being involved in the academia ecosystem, venture ecosystem, which you get many good deals from that angle as well. So those are two strong edges. And as a result of the two, the third one I think is naturally there, which is the network. I have a very strong network within the life science space. Thousands of connections, and not only connections, but people I do know because we've done business in one way or another throughout my career, and also people that can help us bring value to the companies. Because when we look at a company, we not only are looking to provide capital, but we also look to provide support by connecting them with the right people and also advising them in the right direction. We don't want to handhold the companies. We want them to succeed on their own, and that's based on their team. But certainly, we provide strategic guidance, and it's based on experience. So I think this is our differentiator. Those three.
Okay, no, those are excellent, all solid.
Thank you.
So let me ask you another question. What are some key lessons you've learned from your experience in the life sciences sector, and how are you applying them in your approach to GD Partners, your VC?
It's a good question because you get to see, as I said earlier, things that go bad and things that go well. And I think you learn more from the bad things than from the good ones. So you learn from both of them, but from the bad things, I pay close attention. And when you're providing services to companies, you sometimes can see things happening and not necessarily affecting you directly because it's not your company, but you're providing services to them, but you've been part of the development. So those are like lessons that you learn. They're not as expensive as the ones that you might need to experience on your own. But anyway, regardless, I think we've seen providing services to companies, companies that have taken the right turn in pursuit of, maybe attracting more investors, but sometimes they shoot themselves on their foot. A particular example I have, which is one of many learning experiences, but it's a company that was considering a strategic investor, and the company already had a MVP. They already have a product in the market, Class 1 FDA Class 1 product, and this potential investor, they were looking to invest if the device do more than what the device was currently doing, which was possible, was feasible, but that had some implications. The device is intended to do this and that, and now if we change what is intended to be to that device to do, then the intended use is going to change, and the regulatory pathway is different. So those were things that we were advising at the company, and they were risks that we put on the table. There was that risk, like if you please this potential investor, there's a chance that the product that you already have in the market, you cannot continue having it in the market because the regulatory pathway is different. The company took the risks, understanding that there was a gray area, and there was one. That change didn't necessarily mean that it was going to be a different product classification. There was a possibility that it could be interpreted as a different one, and it ended up being a different one, and it ended up causing that the company needed to remove that product from being in the market, and that company ended up going south. So that company didn't make it, and that was one of the wrong turns that company made. They knew the risks, but I think they didn't anticipate that was going to end up that way.
Yeah, that does happen. And there's always that friction between the investors and the company founders or CEO.
Yeah.
And Therefore, you need a good board
Yes.
composed of all different stakeholders
Yes.
to balance out. And,
Yes.
that's an unfortunate story, but like you said, that's from the unfortunates that we learn quite a bit.
Yes.
So,
Yes.
yeah. Okay.
Totally.
Let's move on. So the device landscape is evolving. For instance, wearables, smart implants, and more. What are the biggest changes and trends you're seeing, and where do you think the industry will be in 5 to 10 years?
It's a good question. I think when you started talking about changes, my first thought was to think it from the LP perspective. I think I want to cover it from different angles, but from the LP perspective, I think there is a shift in the number of LPs out there, but I think there is also a shift in LPs being less, but doing larger check sizes compared to before. But the trade-off is that they're looking for high quality funds to invest in. So they're willing to put more, but they're more selective into which they invest in. So that's a shift I'm seeing. I've seen also data, most recently a report from Carta shows that as far as the number of LPs and actually the average check size that they're writing. And I think that brings the point of people are fighting for quality of funds. There was a boom of VC in 2022. Is that boom now? No. There's less VCs and less LPs, but the ones that are still playing, are more selective, and therefore also VCs like us, we're more selective into the investments that we pick. And that translates into the companies. It's like the companies are, the ones that are getting funding are most likely better candidates. So that's one change I've seen. Another change that I think is affecting every industry, and life sciences is not the exception, is AI and machine learning. More and more companies are somehow developing some technology based on AI. And from the VC perspective, that there's an interesting data from PitchBook from actually last week that was amazing when I was reviewing it, because it shows the shift in globally the VC, the AI, machine learning landscape from the VC perspective was impressively high in 2024. There was about $135 billion in value of investments. That was up from $89 billion from the previous year, from 2023. And I think what's more impressive than that is that this year alone, just in one quarter, we have already reached out $73 billion in value of deals. That's more than half of what we did last year, and that's just in one quarter.
Well, yeah.
So that is a shift that every industry has to take into account, because that's the direction we're going.
Okay. No. So the follow-up question to that is how do you think AI specifically will or is reshaping medical devices, and what factors should we consider as it becomes more integrated into healthcare?
I think AI, we're seeing more, as I said earlier, into the whole all industries. In terms of life science medical devices, which I think is one of the things you asked earlier, like, where we focus. We focus mostly in medical devices, diagnostics, some, software as a medical device, which falls within medical device, and some of pharma as well. But I think AI is being integrated every day more and more into the devices and companies that are emerging and coming out for funding, you see that more common. And I think that is a shift that is happening in every industry. So I think, how is that affecting medical devices is more and more medical devices will have some sort of AI piece of it. And it's going to just make medical devices more it's going to create a more preventive medicine environment, in my opinion, because of the nature of the AI embedded into the medical devices. So this is a shift. If you ask me the same question like 3 years ago, yes, we saw this was coming, but here is obviously that is here.
Yeah, we all wondered, is it an algorithm or is there real, functionality behind it? But yeah, every single year that goes by, it really does get more and more solid. So
Yes,
yeah,
totally.
some of them are really ready for commercialization. Let's switch gears and talk about money. And that's about insurance and revenue. Okay. You always wonder, how is something going to get paid? Right. So insurance plays a huge role in healthcare. Everyone knows that.
Yeah.
How do you see reimbursement policies, whether private insurance or government programs like Medicare and Medicaid, impacting the revenue potential of companies you'd invest in? You can talk about med devices as that's a big chunk of your thesis.
Yes. So I think reimbursement is certainly one of the key elements that we in every investment need to look at. Where's the money coming from? So there is a lot of movements around reimbursement, with the current policies. And I think that's making people more cautious about where to invest. I think it's making companies more, or companies smarter when they put together, their business plan, because, those policies that might be the basis of their model, they might not necessarily rely on that. Is more of an assumption. That assumption is not as strong as it was, many years or a few years ago. So I think people are getting more sensitive about it when they pitch. We are more sensitive about when we evaluate it. But I think it's also making a shift into the type of companies that are coming. I think anything that is preventive health is naturally having a higher priority, because I think reimbursement, even with changes, what is most likely to stay ineffective is those companies that will prevent a person from going to the hospital. So any company that do empower the patient to monitor their health without going to the hospital, even within the policies that are shifting now, that those are most likely less likely to be affected, because are most likely the support to those companies from the reimbursement perspective will most likely continue.
Yeah.
So I think when we look at companies, we are very sensitive on the reimbursement landscape, but we tend to lean more towards to those companies that are doing a device or any whatever the technology they have is aligned with the preventive piece of it. So that's how we look at it.
Okay, thank you. Yeah, economics is always important, right? Let's turn more towards your fund per se, the structure and so forth. What is your VC's investment term strategy?
Yes.
Is it a 5, 7, 10-year long fund?
Yes.
So on and so forth. Yeah.
Yes. So it is the typical venture capital firm within life science. Normally a life science or medical device, if we just pick that, is more typically a 10 years horizon. However, given the most recent type of companies that not majority of them, but more and more, you're seeing more digital health companies, software and medical device companies. Those companies tend to have a shorter horizon.
Right.
So you have an opportunity to have exit sooner. So from the angle of more digital health companies and being in the environment, that also is a positive sign from the exit perspective. But our terms are the normal 10 years, which is what it would normally take, to exit. But there's a chance to exit sooner in some of those portfolio companies.
Right. You just want to build a buffer in, right, to make sure you have enough runway.
That's right.
Yeah. Okay. Let's see. Opportunities and deal flow. What excites you the most about opportunities in healthcare devices, or could be digital health or therapeutics? Tell us that.
Excites me whenever I see a company. Well, first, whenever I see a company, I look at it from the angle, do I see them being in the market? Based on my experience being in startup companies, do I see that they have a clear path to market? Along those lines, do I see a clear path from the regulatory approval perspective? So those are things that make me excited. If I see that, also, of course, the business, is there a business model that makes sense? And when those three, click, I get excited and then dig deeper into, the team. There has to be the right team, the right environment, the right skill set. But those are frequent things that make me excited, and also the quality of the deals. Some of the companies that we evaluate, as I said, come from the academia and from West Coast, East Coast, from those important universities. And that's one angle. Whenever I see deals from that, I get excited because I know those are good quality deals. And when I come across companies that we are providing consulting, I'm neutral because I consult many type of companies. I like to get surprised, and when I get surprised is when I get excited is because, well, there's something here, and that happens naturally, and that's how it's all started. It's like I was consulting. We've consulted hundreds, maybe thousands of companies right now, and just some of them get me excited. And just to give you a perspective, it's like over the last 12 months, we've reviewed, I want to say, over 150 companies, maybe more. We're happy about 9 of them.
Yeah.
And we are actually 9 that we know are worth looking deeper. And within those 9, I'm pretty sure not all of the 9 will be suitable for investments, but there's that funnel. And all that is from just having a process that fits you good quality deals. And when something excites you, you feel it, you feel it in your gut.
Exactly. Tell us more about your team at GD Partners and how you believe they'll contribute to the firm's success.
Yes, so we currently have a team of 4. We are actually bringing 2 more team members as we speak. But I think the strength that we have is that we all have different perspectives. I'm the GP, and I have a strong background in medical, in life science, and software as a medical device. And that's my strength. There are other strengths, such as, one is a lawyer. We've had a strong IP background within the life science space. This is one of our team members. We also have another person who brings perspective from the healthcare side. That person is a dentist and also business with business expertise. And we also have another person which have a similar background as mine, in the sense that is an engineer, but also Harvard MBA. So it's you bring different perspective, and we look at opportunities. We chime it from different angles. Yeah. And that's just the team. And as I said, we're bringing 2 more people, and those 2 people are the ones that we are looking to bring are very business savvy, from deal constructions perspective and so on. So they bring a different perspective. So we are all bringing different skill set. But the other thing that is part of the team, even though it's not indirectly part of the team, is the network. Whenever we feel there's a good deal, we share with other VCs. We got hundreds of VCs in our network, and we share deals with them, and vice versa. and actually part of the Angels group as well. And is whenever they got a good deal, they bring it to us, and when we have a good deal, we bring it to them. And sometimes we do phone calls, Zoom calls with the companies all together, and we don't work together, but we're challenging from different angles, and then we got a follow-up call to share perspective. So having that strong network is part of our team and our focus.
That's a good point. Your inner and your outer circles, absolutely. So, lastly, what's next for GD Partners, and what are you most excited about in terms of the future in general, healthcare, venture capital?
Yes, so we're excited about where we stand. I mean, in the sense of we are continuing growing our team. We are continuing looking at companies. We are also continuing raising capital. We are doing all those things in parallel. We are looking at the future with optimism, and that's the future. Is like the good deals that are coming out of this situation. I see opportunities in every situation that I try to look at it from that angle. So we're just looking for those deals and looking for other LPs that want to join us into helping those companies and having an attractive return. That's next for us.
That sounds good. That sounds like foundational stuff. Very good. Okay, now we're gonna start the lightning round. This is always fun. You ready, Oscar?
Yes, I'm ready. Yes.
Okay. So, what's one overhyped healthcare trend?
Preventive health.
You think that's overhyped?
I think so.
Okay, all right. That's fine. And why? Why do you think it's overhyped?
I think those are it's coming out of necessities. Like as I was saying earlier, there's uncertainty on some of the maybe reimbursements, and that could, and this is most recently, of course, but that is another factor that is pushing more preventive technologies, whatever is empowering patients to take control of their health without going to the doctor. That makes sense financially. So any company, I mean, from the reimbursement perspective, that will be a motivation for any insurance to pay for those services if it can help them save in a hospital visit. So that is not new, but I think what's pushing that is like the policies that we're seeing most recently.
Yeah. Okay. Thank you. Name a device innovation you wish existed today.
Maybe there's out there some sort of technology with that, but I haven't seen it yet. But it's real-time diagnostics, with personalized treatment. Something that you can have you can cure based on what exactly is happening to you, and you have this real time.
Yeah. No, they now have complete blood count diagnostics, and you get the results before you can get to your next appointment. I mean, it is so fast. It's amazing.
Yes.
How do you think AI will change the patient experience with devices in 5 years?
I think diagnostic is going to improve. It's a better diagnostics for patients. So that's for sure.
Okay.
That's what I see.
So on the diagnostic front?
Yes.
Okay, that'd be great. How big a role does insurance reimbursement play in a device's success?
Big role.
Yeah.
No doubt about it.
Yeah.
Any device, that is one of the first things we look at, and I think everyone should.
That's right. Revenue trumps everything, doesn't it? So to get paid,
Where's the money coming from?
Yeah, that's the ultimate. Where do you think the best place is to find the next healthcare ideas? Is it West Coast, Silicon Valley, East Coast, Boston, or elsewhere?
I might be biased, but Boston, I think, yes. Yeah. I mean,
Totally biased.
I respect a lot of the companies coming from the West Coast, so many, and throughout the country. But Boston for sure, I think, is my opinion.
Okay, we'll go with Boston then. How do you evaluate a healthcare startup's potential in 60 seconds?
Yeah, I think.
What do you look at very first?
Yes, I think I mentioned briefly about do I see a clear path to market? I think that's one of the first things I look at. And do I see a clear path, regulatory approval pathway? If I see those two first things, then I get excited, and then I go into, as I said, the financials and the team members. Who's running the company? Do they have the right team members, the skill set, and the soft skills as well too? So those are essential things I would look at, and I look at it very closely, very quickly.
Okay.
So I can have very, very first impression. Of course, I don't go by first impression, but normally those are right.
Okay, right. Your gut. Yeah,
Yeah.
very fair, fair answers. What's your prediction in terms of the percentage of med devices that will be AI enabled by 2030?
It's hard to measure, but I think it's increasing. I think if we go by the rate of growth that we've seen, I don't know, approaching the neighborhood of 20%.
Yeah, it's hard to know.
It's hard to know, but
it is increasing.
It is increasing. If it continues increasing in that at that pace, we could see that. Good observation. It's not going to increase at the same pace of AI being used in other industries. There's regulatory approvals.
Right.
Not everything that AI is able to do can easily be translated into medical and be approved. So the growth is not as equal as in other industries, but definitely is growing. So it could be there in the 20s, maybe less.
Yeah, increasing specific percentage, we don't know.
Yeah, it's hard to
but-
say this. I'm guessing here, but it could be around that, I think.
Right, all right. Last but not least,
Yeah.
what's the most futuristic device you'd love to fund?
Well, I think along the lines of what I said earlier is real-time diagnostics. I think this is whatever device helps patient empowerment, having people taking care of their health without going to the hospital. That's what I want to invest in, because I think that's where opportunities are in the direction we're going.
Yeah, we hear more and more about hospital in the homes.
Yeah.
So not just hospital, extreme case like hospice, but just diagnostics, wearables. Yeah.
Yes.
It's going more home.
Yes.
It's going more home.
Yes.
All right. On that
Yeah.
note, thank you so much.
Oh, Elizabeth, thank you very much.
Great
It was
to
a pleasure.
speak to you and
Thank
learn
you.
more about GD Partners and you.
Thank you. My
All right.
pleasure.
Thank you.